You mentioned that there's plenty to be concerned about, whether it be trade uncertainty and the unknowns around there, whether it be the labor market, obviously the inflation picture. But then I was taking a look, and you're holding your S&P year-end target of 6,600, which implies not much upside from here, but also not downside. So explain that 6,600 price target.
Sure thing. So yeah, we can go on a bumpy ride between now and the end of the year, and I certainly think September is historically that time we may see that. I think we have plenty of catalysts on the short-term horizon to give us that sort of 5 to 10% pullback, which would not surprise anybody, I think, in the month of September. You mentioned a couple of the things that might drive that. The uncertainty around trade is certainly a large catalyst that could be a headwind for markets. But away from that, it's just how weak does the labor market get before it stabilizes? And I think one of the drivers in the weakness in the labor market clearly comes from uncertainty around trade, keeping corporations from creating new jobs. But the other is we just don't know how much in the near term artificial intelligence is starting to take away those entry-level jobs from new college grads. So right now, that unemployment rate, that 18 to 34 demographic, has an unemployment rate that's about 10%. If that continues to be a trend, and we haven't sort of made that transition such that we're finding new jobs for new college grads, that can continue to show weakness. On top of that, we've got 11,000 baby boomers that are retiring every month. So the workforce demographic is really unclear right now. Add to all of that is we've got much less immigration. So last year we needed to create about 150,000 jobs a month to keep unemployment unchanged. That new normal may be about 50 to 75,000 jobs. We're below that right now. If we remain below that, we're going to continue to see unemployment rise.